So I previously mentioned when I got started in the business, I was doing almost exclusively Lending Tree. And Lending Tree was the shark infested waters that the commercials used to imply. And it was very transactional. You're competing against three or four other lenders. Borrowers are calling, what's your rate? Give me the lowest rate. And I was getting my butt handed to me, quite frankly, because I was giving rates I knew I could deliver. And my competitors were using the legal loopholes to give rates that I couldn't touch. Then I figured it out. But the main thing was it was very transactional. And there's nothing wrong with transactional, by the way. There are a lot of people who do what I do and they kill it doing this type of lending. You'll find this more in the LoanDepot, Rocket, FinTech world, where it's about volume and just cranking out loans. But as I got deeper and deeper into the business, I figured out that, as I mentioned, rates come from the same place, Wall Street, mortgage-backed securities. And if you're giving a competitive rate, you should be in the ballpark. And the only way, one of the ways to differentiate yourself, easy for me to say, is by becoming a broker. As I mentioned, the brokers have lower overhead, so they do have the more competitive interest rates, especially in this market. So I separated myself from the transactional lending, and because as I've mentioned, there's 30 different factors that go into interest rate. There's also an infinite amount of factors that go into a borrower and their needs and their goals. So I started asking more questions about what they were trying to do or accomplish with their mortgage, meaning, what's the end goal? How long are you going to be in the house? Those type of questions. So it allowed me to advise more than transact and create a relationship with that borrower. And I'm going to show you what I mean. So usually a borrower is interested in looking into buying a home, and they go on the Bankrate. This is their landing page. The fields are already inputted as far as the parameters, loan amount, how much you're putting down. You see this 20% down. And then the lenders with the best rates kind of pop up. And you see the second one there, it's a 30-year fixed, and they're offering 6.5%, APR 6.686, and the upfront cost is $5,419. And just below that, you'll see these little icons, and it's really important. I'm going to show you here what those look like. So, and when you're going online and you're looking at rates, they have to tell you what points are involved, but it's usually fine print, or you have to click over a hyperlink like I did. So it says here is 1.576 points, which equates to 5,419, which is what you saw there previously. But then that other icon that says 8-year cost, 145,519. You click on that, and you get a little bit more detail. And I highlighted the important part. These estimates do not take into account principal payments, taxes, insurance, which is escrow to those who have ever heard of that, and additional payments or fees. So what that does is give this wide net of fees that they're not including, that a borrower, if they're really serious about buying, need to know. So you'll see a borrower, especially a first-time home buyer, will see this information, and those are kind of the numbers they have locked in, and they'll ask a representative from one of those FinTechs to send them a fee sheet to see what their rate and their fees are going to be, and it's going to look like this. So again, Bankrate was not including escrows, principal, interest. Was not including escrows, which is taxes and insurance. But you see here on the top left, this is where you want to look first. It says lender fees, or some fee sheets will have that originator compensation in there. I just put in the points. You see, it's about 5,683 based on the access that I have to rates. And that's really the apples to apples comparison that you should make when you're rate shopping, because everything else is essentially third-party fees that you're going to incur no matter what lender you use. So that lender fee is very important to look at. That's why I highlighted that. And then I also highlighted that there's no escrows, the prepaids and initial escrow payments at closing. The point about that, usually with first-time home buyers, they're not putting 20% down, so they essentially automatically have to escrow. But once you've had a home, 2 or 3 homes, that infers that you have the discipline to own a mortgage and manage a mortgage. You do not have to escrow, and that weighs in heavily on your closing costs. And I'll show you what the difference is here in a bit. But this is the top half of a fee sheet that they look pretty similar no matter what lender you use. And then the bottom half, it'll show you what your payment's going to be. This is without escrows. I highlighted. You see there's no homeowner insurance or property taxes. And so their payment at $17.96, not including escrows. And then the closing costs over there on the bottom right is $86,136. All right, but a lot of people like to escrow. I said you don't have to escrow if you put 20% down, but some people just sleep better at night knowing that it's getting paid. And my job is just to show the options and then let them decide. And usually if someone has a great credit score, that implies that they can pay it on yourself. So why pay a bank to teach you the discipline of paying your escrows if you can do it on your own? You can let that money sit in your savings account, and even though it's not making a ton of money, it's still you're still in control of it, which I think is important today. But let's look at and see what the difference is with the escrow. Okay, so remember this bottom line cash to close is $86,000. Okay. So with the escrows, the fees are the same points, but now the escrows are included, and that comes to $67,000, almost $6,800, and that shows up down here in your final closing costs. That's $92,843. Your principal, interest, taxes, insurance, escrowing payments $2,273. So that's going to be important to know. But if you just went on the bank rate, you're thinking, oh, well, my payment's only going to be $17.96, and I'm only going to have to pay a certain amount of money. So that's kind of like a two-dimensional representation of what the mortgage is going to be. And you really want to have a little bit more detail, have a little bit more information before you make this purchase that is usually the largest financial and emotional transaction that you're going to experience in your life. But I'm going to get to that in a second here. But if you want to go into deeper detail about how it works, please feel free to reach out to me. And if you found this helpful, like, share, follow, subscribe to my YouTube channel. I would love that. And next, I'll talk to you about the difference between transactional and relationship lending. Take care.